Dubai-based real estate crowdfunding platform SmartCrowd has grown its investor base nearly 6 times since the pandemic. The platform allows individual investors to take a fractional share in a rental property. And SmartCrowd CEO and co-founder Sadiq Farid joins us now. Thanks so much for being with us. Now, you're seeing remarkable growth during the current volatility in stocks, bonds, and cryptos. Are people more eager to build diversified portfolios? Is this what's really driving your growth?
Absolutely, that plays a major role. When we started SmartCrowd, we started with the mission of making alternative assets like real estate accessible to the masses, as building diversified investment portfolios are pivotal for one to accumulate and preserve wealth. However, many people find it very difficult to access the real estate because it requires a lot of capital. Having 10 different stocks in the stock market does not necessarily diversify your risk. You need to have different asset classes, but many people struggle. So one should have allocation in different asset classes so one can manage their risk better. And this is what SmartCrowd allows them to do, is to diversify their assets beyond investing in stocks and bonds and get access to alternative assets. Depending on their risk and return profile, the different allocations allows them to build a portfolio that makes sense and can stand test of times. And in current environment, we're seeing a lot of people starting to realize it's important to have access to less volatile assets like real estate that provide them a steady flow of income that they can generate and reinvest and compound their investments over time.
Now, your assets under management have grown more than 60% quarter on quarter, while the number of investors has doubled in the last quarter. What is your forecast for the UAE's real estate market in the near term?
Yeah, it's hard to make short-term predictions. I'm personally very bullish on Dubai real estate since 2019, even before the pandemic. We look at data on a daily basis and we realize the supply had peaked back in 2017, yet the headlines continue to say supply-demand imbalances. We always knew that demand will rise much faster than supply can catch up, and we're starting to see that in current environment. What's really important is the leadership has done a phenomenal job handling the pandemic and building a world-class city that people want to call home. And that's attracting a lot of people. I've been living in UAE for the last 10 years. This is the busiest I've seen Dubai, which is a testament to what a great city this is, the quality of living and the cost of living vis-a-vis other big metropolitan city. That's attracting a lot of people, creating a lot of demand. And also with inflation and the supply chain challenges that we have, the cost of construction has also risen, which is going to provide a higher floor to the real estate market. So we see this price appreciation we're seeing in the market to continue, and as more demand comes into the market, the rents are starting to rise as well too, providing further stability to the price movement. So in the short term, I think this market, this rise is very different from what we have witnessed in the past. It's quite sustainable, and in the long term, we see prices appreciating a lot more than what we have witnessed up to this point.
And how do you feel that platforms such as yours really help to level income inequality? I mean, what's the minimum a person can invest? What's the risk? And what type of ROI can they expect?
A very good question. So our minimum investment is 500 dirhams, yet our average investment on the platform is almost 8,000 dirhams. And an average person has 4 investments on the platform. So people are finding it extremely valuable and continue to invest on the platform. We have a very sticky product, a lot of reinvestment come onto the platform. Obviously this is a very biased view, but we think this is the best way to get exposure to real estate for an average retail investor. Because if you look at the alternative, for many, there isn't an alternative. For some that have some amount of money, they can get a down payment and buy a property, but you're introducing more risk into your portfolio by taking on leverage, taking on interest rate risk. And an environment right now with interest rates are expected to go high, it becomes quite challenging if you can't control that, or if you don't have holding power to hold the asset if things get worse. And alternatively, if you're fortunate to have enough money to buy a property outright, you're putting all your money in one asset. You would never invest all your money in Apple shares. So why do you invest that way in real estate?
And you recently closed a bridge round in excess of $3 million. How will you use this funding to scale your operations?
Yeah, so that's a great testament from our investors' belief in what we're building. That money is going to be used to obviously scale our team to handle larger volumes, spend a bit more on marketing to raise awareness, and there's a lot of other things in the pipeline that we're working on that we'll be announcing very soon, inshallah.
Thanks so much for joining us.
Thank you for having me.